Dan Ives just made a powerful statement, saying China has reopened a golden opportunity for Nvidia, and he believes the White House is starting to understand that Nvidia needs access to that market. This came directly from Dan Ives, the global head of tech research at Wedbush Securities, during his appearance on CNBC Closing Bell, to discuss Nvidia's sale of H200 chips to China. In a moment, I am going to show you the clip of Dan Ives so you can hear exactly what he said. After that, I will break it down, with my full reaction, and explain what this means for investors right now. Then I will take you through my in-depth analysis of 2 brilliant AI stocks to buy today. Hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you never miss another important financial investing update. Alright, let us hear what Dan Ives had to say.
We are joined now by Wedbush star analyst Dan Ives. It's good to have you here.
Great to be here.
How significant is this?
It's a watershed moment if it plays out, and I believe it will. Look, I mean, our whole view is you don't want to give Huawei and China Tech more power. By taking Nvidia out of that market, that's what they've done. And with that, you're talking about what could be 15, 20 billion a year. And I think this shows, and we've seen it being in DC a bunch the last few months. I mean, you're seeing changing winds there. I mean, there's a recognition that you have to give Nvidia that market. You have to let that open because otherwise, China Tech gets an advantage. And for the first time in 30 years, U.S. Tech is ahead of China.
Well, first of all, you call it a watershed moment. The stock's up 1%. I mean, really? Watershed? Yeah. Stock's up 1%. If it was such a watershed moment, wouldn't the stock be up more than 1%?
No, I mean, look, I view it as we go into the coming weeks, we're going to look at this as more and more China opens up. Even as Trump's going to do the visit there in April, I think this is more the tea leaves because I view it, this is just the start of what's going to be an opening of that relationship. And I expect more and more. NVIDIA is going to be able to sell into that market. And that's not baked in. I mean, if you start to think about from a street perspective, the view is China very, very cautious. I'd say negative in terms of what that's going to ultimately be. I'd say the street's underreacting to what I believe is really going to be an opening up of what's going to be a golden opportunity for NVIDIA.
Christina laid it out, though. It's China could very well be like, thanks, but no thanks. I mean, the market seems like it's not willing to take a big leap forward because there are many things that are still at play. Yeah, not to mention the fact that these are, already like 18-month-old outdated chips from the highest quality ones that NVIDIA produces anyway.
And still, I think 1 to 2 years ahead of where Huawei is. So it might be just being in Asia for 3 weeks. You go to any China big tech company, whatever they say publicly, at the end of the day, they want NVIDIA chips. There's only one chip fueling the AI revolution. I think this just signifies cool relations, and I think obviously a lot more positive between U.S. and China. That's bullish for big tech. It's bullish for you. It's bullish for AMD and others.
Okay, so let me ask you this. Would you admit that we have started to see some dispersion among the hyperscalers and among the mega caps on how the stocks are trading and how each one individually is now being viewed rather than a monolith? Would you admit that?
Yeah,
okay.
I definitely.
Okay, so you would. So I'm wondering, at some point, can you have an outperform on an Apple, on an Amazon, on a Meta, on a Microsoft, and on an Alphabet? You're judging all of them equal when telling me that this dispersion that we've witnessed is legit, it's real, and it may continue to be the case. How would you come back with that?
Sure. What I'd say is that when it's the 6th, 7th inning of this AI revolution, then you're going to have to separate out, and there's going to be clear winners and losers. Where we are today, I said it's top of the third, one out relative to this AI game. And when I look at the consumer AI revolution, it speaks to our Apple in terms of increased price tag, hasn't even started. So when I look at where Meta and what we see with Alphabet, what we see with Apple, I think that's just starting. Now, I think you will see the market ultimately, just like Microsoft right now and Oracle, almost putting in the penalty box. But I think that's the wrong way to view that. And I think you could pound the table or be much more bullish on certain mega caps versus others. And that's how we've tried to sort of characterize, what are the sort of the A, the B, the C group.
Right from the beginning, you heard Dan Ives call this situation a watershed moment. That's a big phrase, and the host immediately challenged him on it because the stock was only up about 1%, and that's a fair reaction. Usually, when something is truly game-changing, markets tend to explode. But Ives wasn't talking about a one-day stock pop. What he was really saying is that this moment is the beginning of something bigger. He views this as a signal that the relationship between US tech and China is shifting, and that shift is going to open a much larger door for companies like Nvidia. His argument is straightforward. By restricting Nvidia from selling into China for the past year, the US indirectly empowered Huawei and other Chinese chipmakers. That is a real concern because Huawei has been trying to close the gap with Nvidia in AI chip performance. So for Ives, allowing Nvidia to sell even older generation chips back into the Chinese market is not a small thing. He believes this could translate into $15 to $20 billion in annual revenue that is not fully priced into the stock today. That's why he uses the phrase watershed moment, not because of what happened today, but because of what he thinks begins here. Now the host pushed back with what a lot of investors are thinking right now. China could easily say thanks, but no thanks. These chips are already 18 months old. They are not the newest high-powered GPUs, and the market is still unsure whether China will meaningfully buy them at scale. The lack of clarity is why the stock didn't explode upward. But look at Ives' response. He came back from Asia recently, and his point was blunt. Regardless of what Chinese tech companies say publicly, behind the scenes, they all want Nvidia chips. He claims they are still 1 to 2 years ahead of Huawei's capabilities, even with these slightly older models. From his perspective, Nvidia is still the engine of the global AI revolution, and demand for their chips in China is far from dead. He sees this new approval as a cooling of tensions, a symbolic opening that could grow as political relations thaw. He even referenced the planned visit to China that he expects will reinforce that trend. In his view, this is the start of a warmer US and China tech environment, and if that continues, Nvidia, AMD, and large-cap US tech companies all benefit. Then the conversation shifted to something important that many investors have been noticing: dispersion. For most of 2023 and 2024, mega-cap tech moved like one giant block. If Microsoft went up, so did Alphabet. If Meta dropped, Amazon felt it too. But lately that connection is broken. Some companies are surging while others are cooling off. The host pressed Ives on this point because it exposes a contradiction. If the market is starting to treat tech giants individually, judging their AI strategies separately, how can he still have outperform ratings on all of them at once? You can't say dispersion is real, but then treat every company as equally strong. And Ives gave a very telling answer. He said, "We are only in the top of the third inning in the AI story." In other words, this is still very early. In early innings, he believes you can have several winners at the same time, even if some are temporarily in the penalty box. He pointed to Microsoft and Oracle as examples. The market has recently cooled on them, but he believes the pullback is short-sighted. In his view, once consumer AI kicks in at scale, especially on the Apple side, the next major wave of value creation will begin. He emphasized that the consumer AI revolution has not even started yet, and that is where companies like Apple and Meta will shine. So in his framework, the dispersion we're seeing now is not permanent separation. It is more like temporary turbulence inside a larger rising wave that still lifts most of the megacaps over time. This is the kind of long-horizon thinking that makes Dan Ives extremely bullish on the entire AI ecosystem. Even though the market is reacting cautiously in the short term, he sees the broader trend line pushing upward as political tensions ease, restrictions soften, and real demand from China returns to the table. Whether you agree with him or not, his perspective is clear. This isn't about today's 1% move. It is about a multi-year window that he believes reopens the largest international market for AI chips at a moment when global demand is exploding. And that is the core of what this interview was all about: the short-term noise versus the long-term shift. The question now is whether the market will eventually catch up to the vision Dan Ives is laying out. Let me know in the comments if you think Nvidia is truly entering a new phase, or if you believe the China risk is still too big to ignore. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now, let's break down two companies not just riding the AI wave, but leading it, giants you need on your radar for 2025. First up is Meta Platforms, ticker symbol Meta. If you've spent any time online in the last decade, you've almost certainly interacted with one of Meta's products. But what makes this company so compelling for investors in 2025 and beyond? Let's dive in. Yes, it's the company behind Facebook, but Meta is so much more. It owns Instagram, WhatsApp, and Messenger, connecting nearly 4 billion people every month. That's more than half the world's population, all using Meta's platforms to share, communicate, and do business. These apps aren't just social networks, they're digital infrastructure for modern life, shaping how we connect, shop, and even work. That scale gives Meta a data advantage that's almost impossible to replicate. Every like, share, and message generates valuable insights, allowing Meta to understand global trends and individual preferences at a level few companies can match. This data is the fuel that powers everything Meta does, from product development to advertising. This massive user base powers one of the most effective advertising machines ever built. Meta's platforms are where billions of people spend their time, making them the go-to destination for advertisers looking to reach targeted audiences at scale. Whether you're a small business or a global brand, Meta offers tools to connect with customers in ways that simply weren't possible before. Meta's deep understanding of user behavior lets advertisers target with laser precision, making its ad platform a must for businesses worldwide. The company's algorithms can predict what users want to see, when they want to see it, and how likely they are to engage. This level of targeting drives higher returns for advertisers and keeps Meta's ad revenue growing year after year. But here's what sets Meta apart for 2025 and beyond. It's transforming into an AI-first company. This isn't just a buzzword. Meta is fundamentally rethinking how it operates, putting artificial intelligence at the core of its products, services, and business strategy. The company is betting that AI will shape the next era of technology, and it's determined to lead the way. Mark Zuckerberg is re-architecting Meta around artificial intelligence, investing billions in AI infrastructure and talent, and developing models like Llama. These investments aren't just about keeping up, they're about setting the pace for the entire industry. Meta's AI teams are working on everything from natural language processing to computer vision, building tools that will power the next generation of digital experiences. So how does this AI focus make Meta more valuable? For starters, AI is already transforming how users interact with Meta's platforms. From smarter content recommendations to advanced moderation tools, AI is making Meta's apps more engaging, safer, and more useful. But the real value comes from what's next. AI-powered products and services that could redefine entire industries. First, AI supercharges content recommendations. Think Instagram Reels and your Facebook feed getting eerily good at keeping you engaged. The algorithms learn your interests, adapt to your habits, and serve up content that keeps you scrolling. This not only improves the user experience, but also increases the time people spend on Meta's platforms, which is crucial for ad revenue. The longer you stay, the more ads Meta can show, boosting revenue. But it's not just about quantity. AI helps ensure that the ads you see are relevant and timely, making them more effective for advertisers and less intrusive for users. This virtuous cycle keeps both users and businesses coming back. On the advertising side, AI helps businesses optimize campaigns, predict winning creatives, and discover new audiences, making Meta's ecosystem even stickier. Small businesses can now compete with big brands thanks to AI-driven tools that automate much of the ad creation and targeting process. This democratization of advertising is a game-changer, opening up new revenue streams for Meta. This deepens Meta's moat against competitors like TikTok and Snapchat. While rivals are innovating fast, Meta's scale, data, and AI capabilities give it a unique edge. The company can quickly adapt to new trends, roll out features across billions of users, and leverage its vast resources to stay ahead of the curve. Meta is also rolling out AI-powered chatbots and assistants in Messenger and WhatsApp. These aren't just simple bots. They're intelligent agents that can understand context, answer questions, and even complete tasks for users. Imagine having a personal assistant in your pocket, available 24/7, integrated seamlessly into the apps you already use. Imagine planning a trip or getting customer service from an AI, all within the app. Businesses will pay for that, and Meta is ready to scale it. These AI assistants can handle bookings, answer product questions, and resolve issues instantly, reducing costs for businesses and improving the customer experience. This opens up entirely new business models for Meta, from transaction fees to premium services. For small businesses, these tools are a lifeline, enabling them to offer round-the-clock support and personalized service without hiring large teams. As more businesses adopt these AI solutions, Meta's platforms become even more indispensable, driving user engagement and loyalty. Now about the metaverse. While it's still early, its future depends on AI advancements. The vision is to create immersive, interactive digital worlds where people can work, play, and socialize. But building these worlds requires sophisticated AI to generate realistic environments, animate avatars, and facilitate natural interactions. Building realistic virtual worlds and intelligent avatars requires massive AI power, and Meta's investments today lay the groundwork for tomorrow's digital experiences. The company is developing AI that can understand speech, recognize gestures, and even simulate emotions, making virtual interactions feel more human and engaging. If the metaverse vision pays off, the upside could be enormous. We're talking about new markets for virtual goods, digital real estate, and immersive advertising. Meta could become the backbone of the next internet, capturing value across entertainment, education, commerce, and beyond. Financially, Meta is a cash machine. The company generates tens of billions in profit every year, giving it the resources to invest aggressively in new technologies. This financial firepower is a key advantage, allowing Meta to weather economic storms and outlast less well-funded competitors. Despite heavy investments, it remains highly profitable, with a rock-solid balance sheet and plenty of cash to keep innovating or make strategic acquisitions. Meta's financial discipline means it can take big bets on the future without jeopardizing its core business. This financial strength lets Meta play the long game, outspending and out-innovating rivals. Whether it's acquiring promising startups, building new data centers, or hiring top AI talent, Meta has the resources to stay ahead in a rapidly changing tech landscape. After a rough 2022, Meta's stock has rebounded, but there's still room to run as the market wakes up to its AI strategy. Investors are starting to see Meta not just as a social media company, but as a technology leader with a clear vision for the future. As new AI features drive growth, expect a shift in perception from dying social media to AI powerhouse. This transformation is already underway, with Meta rolling out AI-driven products and services that are changing how people interact with technology. The company now sits at a market cap of $1.65 trillion, supported by a price-to-earnings ratio of 29.07 and an earnings per share of $22.60. Revenue for 2024 reached $164.5 billion, and Meta delivered an impressive $62.36 billion in net income. These numbers show a business that has not only stabilized after years of volatility, but one that is now aggressively positioning itself at the center of the AI-driven advertising and social ecosystem. The scale of Meta's platforms, combined with its rapidly improving efficiency, continues to unlock new levels of profitability that the market can no longer ignore. To sum up, Meta has unmatched scale, a dominant core business, a bold AI strategy, and the resources to execute. It's not just about maintaining its lead in social media. It's about building the foundation for the next wave of digital innovation. They're using AI to enhance existing products and create new ones, positioning themselves at the forefront of the AI revolution. From smarter feeds to virtual assistants and immersive worlds, Meta is shaping the future of how we live and work online. Of course, there are risks. Regulation is a constant concern, with governments around the world scrutinizing Meta's practices. Competition is fierce, and the tech landscape can shift quickly. But Meta's track record of adapting and thriving in the face of challenges shouldn't be underestimated. While risks like regulation and competition exist, the potential reward is substantial. Meta is a must-watch for any long-term investor seeking AI exposure. If you're looking for a company that combines scale, innovation, and financial strength, Meta Platforms deserves a spot on your radar for 2025 and beyond. Next up is Alphabet, ticker symbol GOOG. A company that's become so deeply woven into our daily lives, it's almost invisible. Whether you're searching for information, watching videos, navigating a new city, or checking your email, chances are you're using an Alphabet product without even thinking about it. It's nearly impossible to go a day without interacting with Alphabet's ecosystem. Google Search, YouTube, Maps, Gmail, these aren't just popular services, they're essential tools for billions of people worldwide. From students researching homework, to professionals collaborating on projects, to families planning vacations, Alphabet's products are the digital infrastructure of modern life. Alphabet's dominance starts with Google Search, which commands about 90% of the global market. This isn't just a statistic, it's a testament to the trust and reliability users place in Google every single day. The sheer scale of this reach means that Google is the gateway to the internet for most of the world. Every search query is an opportunity for Alphabet to deliver highly targeted ads, making digital advertising the company's primary revenue engine. In 2023 alone, Alphabet generated over $200 billion from advertising, leveraging its unmatched data and AI to connect businesses with the right customers at the right time. But here's what most people miss. Google has been an AI company from the very beginning. Long before artificial intelligence became a buzzword, Google was quietly building some of the world's most advanced algorithms, using machine learning to improve search results, filter spam, and even translate languages. Its search algorithms, autocorrect, and ranking systems are all powered by AI, refined over decades of research and billions of user interactions. Every time you see a helpful suggestion or an accurate search result, you're witnessing the power of Google's AI in action. This relentless focus on innovation has kept Google at the forefront of the tech industry. DeepMind, Alphabet's world-renowned AI research lab, is behind breakthroughs like AlphaGo, which famously defeated the world champion at the ancient game of Go, a feat once thought impossible for machines. DeepMind's research isn't just about games, it's driving advances in healthcare, energy efficiency, and fundamental science, cementing Alphabet's leadership in AI. Now, with generative AI exploding onto the scene, Alphabet is moving fast to integrate this transformative technology across its entire product lineup. From smarter email suggestions in Gmail to AI-powered photo editing in Google Photos, generative AI is making Alphabet's products more helpful, intuitive, and personalized than ever before. Their Gemini model, Alphabet's answer to the generative AI revolution, brings conversational, AI-generated answers directly into Google Search. Imagine searching for a vacation destination and instantly getting a detailed trip plan, or comparing products with side-by-side AI-generated summaries, all right on the results page. This isn't just a new feature, it's a fundamental shift in how we interact with information online. These innovations could make search even more indispensable, turning it from a simple query box into a true digital assistant that anticipates your needs and delivers answers in real time, wherever you are. YouTube, the world's second-largest search engine, is also powered by AI. Its recommendation algorithms help billions of users discover new content, while new AI tools are rolling out for creators, automatic video editing, script generation, and even AI-generated music tracks. This not only makes content creation easier, but also raises the bar for creativity and engagement on the platform. By empowering creators with cutting-edge AI, YouTube becomes more vibrant and dynamic, attracting even more viewers, and, in turn, more advertising dollars. The flywheel effect is powerful. Better tools lead to better content, which draws bigger audiences and more revenue. Beyond advertising, Google Cloud is emerging as another major growth engine for Alphabet. Competing with giants like Amazon Web Services and Microsoft Azure, Google Cloud offers businesses access to the same powerful AI models and infrastructure that power Google's own products. Enterprises can tap into Google's AI expertise through the cloud, using advanced analytics, machine learning, and data management tools to transform their own operations. This is fueling a fast-growing, high-margin revenue stream that's still in its early innings. Alphabet's Other Bets division is where the company takes its biggest swings. Waymo, the leader in self-driving technology, is a prime example. Using state-of-the-art AI, Waymo's vehicles are already navigating city streets, collecting data, and moving us closer to a future where autonomous transportation is the norm. The potential market for self-driving tech is measured in trillions, and Alphabet is at the forefront. Financially, Alphabet is a fortress. With over $100 billion in cash on its balance sheet, the company has the flexibility to invest aggressively in new technologies, acquire promising startups, and return capital to shareholders through buybacks and dividends. This war chest gives Alphabet a huge advantage in the fast-moving, capital-intensive world of AI. This stability is crucial. In an industry where fortunes can change overnight, Alphabet's financial strength allows it to weather storms, outlast competitors, and double down on its most promising bets. Some worry that AI could disrupt the very foundation of Google's search business. But if anyone is positioned to lead the AI-powered search evolution, it's Alphabet. The company is already reimagining what search can be, using AI to deliver richer, more interactive, and more personalized results. Alphabet has the data, the talent, and the infrastructure to stay ahead of the curve. Its global network of data centers, world-class engineers, and vast troves of user data create a moat that's nearly impossible for competitors to cross. As Alphabet finds new ways to monetize generative AI, whether through smarter ads, premium features, or entirely new products, expect the market to reward them. Investors are watching closely, and the company's track record suggests there's plenty of growth ahead. In short, Alphabet combines an untouchable core business, a booming cloud division, world-class AI research, and high-upside moonshots. It's a rare blend of stability and innovation, with each part of the business reinforcing the others. The company has reached a massive market cap of $3.83 trillion, with a price-to-earnings ratio of 31.37 and earnings per share of $10.13. For 2024, Alphabet reported an incredible $350 billion in revenue and $100.11 billion in net income. Alphabet's dominant position in search, cloud computing, and AI continues to generate enormous cash flow, giving the company the resources to invest heavily in the next wave of artificial intelligence. With its unmatched data advantage and expanding technology ecosystem, Alphabet remains one of the most influential and resilient companies in the modern digital economy. For long-term investors, Alphabet is a blue-chip stock with real growth potential, a rare and powerful combination. With its unmatched scale, relentless innovation, and financial strength, Alphabet is poised to shape the future of technology for decades to come. So, there you have it, two AI giants, Meta and Alphabet, both standing at the forefront of the artificial intelligence revolution and poised for major growth as we head into 2025. These companies aren't just riding the AI wave, they're actively shaping the future of technology, business, and even how we interact with the world around us. Their innovations are setting the pace for the entire industry, and their influence is only expected to grow as AI becomes more deeply integrated into our daily lives. These aren't speculative plays, they're dominant companies leading the AI revolution and unlocking new growth opportunities across multiple sectors. From social media and digital advertising to cloud computing and advanced search, Meta and Alphabet are leveraging their massive resources and talent pools to push the boundaries of what's possible with AI. Their platforms are already touching billions of lives, and their continued investment in research and development means they're likely to stay ahead of the curve for years to come. Of course, investing always comes with risks, and it's important to remember that even the biggest companies can face unexpected challenges. Market conditions can change, regulations can shift, and new competitors can emerge. That's why it's crucial to do your own research, stay informed, and consider your own financial goals and risk tolerance before making any investment decisions. Now I want to hear from you. Between Meta's AI-powered social ecosystem, which is transforming the way we connect and share information, and Alphabet's AI-integrated search and cloud empire, which is revolutionizing how we access knowledge and power businesses, which company do you think has the stronger long-term AI strategy? Are you more excited about Meta's vision for immersive digital experiences, or do you see Alphabet's data-driven approach as the key to future success? Let me know your thoughts in the comments below. I'm really interested to see which side you're on and why you think one company might outpace the other in the AI race. And if you enjoyed this breakdown, don't forget to like, subscribe, and share your thoughts with the community. Your engagement helps us bring you more in-depth analysis and keeps the conversation going. Thanks for watching, and I'll see you in the next one.